Welcome everyone to another blockchain. This time is going to be the last one of 2025, and we're going to talk about some interesting topics, trying to recap what has been going on. And I have an amazing person with me today, Makram. How are you?
That's very awkward, huh? I'm waiting for Dennis first, and the counter starts and the counter stops, and then Dennis is here. Hello, everyone.
So,
It's amazing. How are you, Dennis?
exactly. I think it's good that for the last blockchain of the year, it's the two of us, as it should be,
Yeah,
right?
yeah. It
Um,
has to be. It has to be.
I, I think it's the 125th episode um, of blockchain, which is, a nice, not round number, but it's, if you double it, then it becomes round. So,
We
um,
will. We will.
and so I think today, they asked us to talk about what has been going on throughout 2025, right? But not just in terms of Blocksquare. We were asked to talk about 2025 in general. Trying to go from the macro to the narrower topic of real estate tokenization, of course. But if you look back throughout this year, what would be a couple of keywords, or how would you sum it up in a way?
It's a very interesting year, I believe, for everyone in tokenization and real world asset tokenization in general, but specifically in real estate tokenization, because there's many aspects of what everyone, specifically us, have been waiting for several years now that have happened and have taken place this year. At the same time, institutions started getting into real estate tokenization. At the same time, there are a few things, and it's good to feel that you've done the right choice eventually. And here, I wouldn't say that I've done the right choice. I would say that, for example, Dennis have done the right choice when you chose Ethereum. At that time, I didn't know why Ethereum. So Dennis used to explain why Ethereum, and I used to say, okay, it makes sense. We need something that's very solid to build our infrastructure on, so that, because what's most important in real estate is not to eliminate the cost of gas here or to create maximum speed there. It is actually to do the most secure and the most trustworthy. While this year, with the changes in ETH, you see gas fees have dropped significantly. And it seems that it will be dropping even more significant. So this means that not only is it an infrastructure that's stable, solid, the most stable, solid currently. Correct me if I'm wrong, because I'm sure I don't know all of the technology that's out there. We are at something that's very efficient and very feasible. At the same time, changes happened in legislation in many jurisdictions, specifically the one I sit in today in Dubai and UAE, where deed impact, so impacting the deed, um, started, and that is a very big thing. Now, at the same time, and that's something personal here on tokenization, um, my thoughts that I thought would be so solid on certain things that I rejected, and I always advocated for the other things. So I always advocated for um, you need to impact the register immediately. That's the only way to do it. It should be at the and yeah, that's great. However, there are many things that happen which are have not been seen in my simulation before, that showed me that there's risks and there's aspects of this that make maybe tokenization and not impacting the register that way better, safer, more feasible, and more efficient. So there's many things that happened on a global level, tokenization wise. There's many things that are happening real estate wise, and much more is to come real estate wise. And we'll obviously talk about some of it now. We can't talk about all of it. There's much that's happening on a Blocksquare level, because we've achieved several milestones, which we will talk about today. And on a personal level, we're evolving on the thought, the idea. So, all the research, all the studies, everything that we've done on this, and probably we understand a bit of it. We don't want to say that we probably are the most who understand about real estate tokenization. We understand a bit of it. So the bit we understood is evolving. Dennis, is it the same at your end, or what is it?
Um, yeah, I think there's, from a wider picture, I like to be right, of course, like everybody, right? But I was,
I
if somebody
mentioned that
goes
because
back,
you.
if somebody goes back in the block chats, in one or many block chats, I always said, look, everybody's advocating for all these other blockchains just because of transaction fees and transaction deployment costs and stuff like that. Um, and it's going to be solved. There's going to be down the road, if one blockchain is able to solve it, Ethereum is going to be able to solve it. And it has the largest by far developer attention. So a lot of developers are, in Solidity, in the blockchain space, are focused on Ethereum and making Ethereum a great piece of infrastructure because it is the most decentralized one. So the ethos of the developer community in Web3 is open source, decentralized ownership. Whatever replica of Ethereum there is, it's always a very centralized component to it. Otherwise, it doesn't exist. For instance, all the L2s have the sequencers that are very centralized server, basically, without service. Without it, the whole thing doesn't work. And they're able to make transaction costs lower just because of they're basically leeching off of Ethereum, and instead of Ethereum, charging them hefty amounts for being able to operate, it's not. It's basically like this big whale that is, allowing the smaller fish to go around and eat a bit out of it, right, from it. But if it would start, charging them the menu, then the question becomes of if are these small fish able to swim even, and live and thrive. And so I think you see today, I have this small marker on my browser, right, which shows me the current gas cost, and it doesn't have the decimals that it needs. I need to replace it with a new one because the gas fees, the gas costs are so small. And this just proves that Ethereum is evolving and it's becoming, the number one. And there's no talk about other L1s that could overtake it. There's just questions of how these other networks might exist and what kind of functionalities and focus might they have that Ethereum would not be able to adopt. And um, my thought is that there's not going to be any chain that will be an app chain or specifically for one use case. If you think there's going to be an RWA chain, my projection in the next 5 years, no chain is going to be for a specific use case. It's not going to exist. It's just not efficient. It's much more efficient to have all the liquidity on one single chain. All that bridge, all those bridges, all those things are just going to go away. I think a lot of the innovation that might happen on the smaller chains is going to be eaten up by Ethereum and implemented on Ethereum as well. And I think there's a mono chain future in a way, with a few other alternatives maybe, but because we're talking about the Internet of Finance, it's much more efficient if it all happens on one and we all share its ownership by owning Ethereum. The other part that I think is that due to this, many institutions have chosen Ethereum as, their number one choice, which makes it even more robust because it says, they're going to bring liquidity to it. They will try to create alternatives, but they will not be able to figure it between themselves who's going to be the king of that chain. And so each of them is going to create their own JP Morgan chain and the BlackRock chain and the whatnot chain. But because they're not going to be able to figure out who will be the boss or who should have which amount, and they're not going to be able to create one joint solution for just for them,
you see
It's
that
probably
they will
they're gonna
attempt to
need to
create
fall
their
back to
own?
Ethereum.
Do you
Sorry,
see that they will attempt to create their own? Because
they're all
historically,
attempting. They're all attempting to create their
historically
own.
they were smart enough to understand that they shouldn't create another Swift. Historically, they were smart enough to understand that don't try to create another Visa. Take a part of the
Yeah,
game, do your business in a very good way. And
yeah,
it seems to me that between XRP and Ethereum, unless I'm mistaken, most institutions are going to either. And
yeah,
isn't it Ripple? Is it Ripple or
yeah,
XRP? I don't know
yeah,
what would the chain be called, but it's Ripple
yeah,
and
yeah,
Ethereum that are the most common currently. And it seems that they're going there. And it's better, it's smarter if you make cars as a bank. You
yeah,
create transactions and you run those through your system, not to try to build your own roads to run on the road that runs, because it has the infrastructure is high cost, low profit, and this is shown today when you look at the total ETH income from transacting on ETH.
hmm,
It's going smaller and smaller every month, and eventually it will
yeah,
go even smaller and smaller. So I don't believe any of them will be motivated to create that, and there's no motive beyond money, in my opinion. If you're in the business of money, yeah. So the business of
yeah.
control is something that they probably have all given up on when it comes to DeFi in general, and when it comes to on-chain transactions, isn't it?
I think yes, you're perfectly right. I think that's the rationale behind it. There's still that ego rationale that drives the direction of, well, we need to control everything, we need to be on top of everything, we need to try at least, because maybe if we don't do it, somebody else does it, our competitor does it, and then we're not in the game, and then we don't want to be in the situation where we need to use their infrastructure, right? So
Yeah.
they're doing it just because of as a safety boat of sorts. Like, what if Ethereum all of a sudden becomes obsolete and then there's room in the market? We need to be ready. So for them, it's like a small overhead to invest in such a thing. But the headlines that you see, I don't think traditional finance is going to run on JP Morgan chain, or it's going to run on something else. Uber was not created by a taxi driver or an owner of a taxi company, because it would have been too dangerous for them to go and try to risk all the licenses that they needed to obtain during their 50 or 60 years history of existence to go and cannibalize their own business. And instead somebody else created Uber. So, and now everybody's is either driving it or ordering an Uber to get somewhere. So
And I believe
yeah,
even competitors or disruptors to Uber are going on Uber. For example, I believe they've signed up Waymo. Regardless, I'm sure that the evolution in 2025 was very essential to the future of the industry and what it can entail. Yeah,
definitely,
and clear
definitely.
differentiators of what we do, similar to our connection DeFi, which we will touch on today, because we've started several very long time ago, and then through 2025 part of our goals was to continue on those, and some will materialize also in the coming year. And that's an aspect that I didn't see as important. So every time we had a chat, whenever we talked about that, I'm the guy who feels that the real estate side is the most important, and feels that still, again, we're tokenizing real estate. So I still think that way. But I used to think that the DeFi element, as I used to define it, it's a hobby. Yeah. So our business is tokenizing real estate, and DeFi around it is a hobby. And eventually you don't know, it's a major differentiator, and it's an edge. And if things and work to make that happen, that's a big differentiator. So currently, I don't believe anyone tokenizing real estate has that covered like Blocksquare. Is there any?
I don't think so. I mean,
No.
There might
Probably
be,
there is.
but I don't think there is. No.
If there is somebody who
I
really
mean, there's
follows and another guy who partly follows did not hear of you, so there's a problem there. So
no, look,
so yeah.
the main thing is that I think it was 2 or 3 years ago. There was this um downturn in crypto, right? Again, like, you know, every time. And there was a decision to be made on a, on the level of, that was 2021, 22. Um, there was a decision to be made which direction Blocksquare will be building. Are we going to be building in a Web3 DeFi environment, or are we going to be building in a centralized finance um, road or direction, right? And so there was kind of two fields that emerged from it, and one was, let's tokenize traditional securities, or let's create tokens that have certain qualities that might replicate traditional securities, but they're not traditional securities being tokenized. And we dissect the essence of the asset class as real estate and create tokens that translate that quality of real estate. And what are the opportunities going one and the other way? And we chose the second one because we felt that decentralized finance is the new finance. It's not going to be called decentralized finance in the future. It's just going to be finance, and everything's going to run there, and all the liquidity of the world is going to be there. So we need to bring and create infrastructure that can communicate, that can live in that environment. Um, and so that's the direction we've taken. And we haven't pivoted from it ever since. There's ups and downs, like every time. And we see traditional finance, picking up on tokenization, but it has its limits. It's probably will live for a period of time, but the question is, how much will it grow, and where will it run a roadblock at a certain point in time?
And here, every discussion at that time. So, for example, when we were discussing the point, when we were discussing, every discussion became an argument and became a big fight of no, this is and then one at least will go home upset that day. So uh, the 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 evolution is important because again, somebody who didn't realize the importance of that does realize today, and that's very important. And I believe this is where we're evolving, and 2025 was essential to that. Can I call it the year prior to mainstream adoption going full thrust? Is it? Do you feel that it's as big as this being the year, or no? Do you feel that there may be another year before the mainstream adoption goes full thrust?
Well, that's a $1 million question again, right? There's this misjudgment of maturity always that we have, right? We're speaking from the inside out, and then we're looking from the outside in. I think there has been a tipping point. The fact is that all financial institutions, major financial institutions, are embracing tokenization as a de facto thing. You don't go in a boardroom or in a room with full of managers talking about tokenization and nobody knows what it's about. That doesn't happen anymore. Um, you have calls with larger players that maybe not involved in the direct financial part of things, but they are involved in somewhere in the transaction, um, for example, um, Mastercard, Visa, and so forth. This is all companies that are very active in the space of crypto. They're serving it, they're embracing it, and tokenization is also part of it. So I think it might be the year before, or it might be the year before the year, but definitely I think by the end of this decade, this will not be a discussion anymore. It's just, going to be standard business for everybody involved. And if we look at RWA just as a sector, In 2022, what was it? I think it was around just below 2 billion, or just above 2 billion or so, maybe around 3 billion in size. Right now, the on-chain data shows we're at 35 billion. So it's grown tenfold, at least in this short period of time. However, if you look at real estate, it's still a very, very, very tiny fraction. And most of this is taken up by stablecoins and the underlying treasuries. Stablecoin companies have now become the major holders of US debt. And I think that's kind of a major shift. So you talk with banks, you talk with and stablecoins are something that's there. You know, when we started Blocksquare, there was no real stablecoin on the market at that time. I think there was Tether, but so USDT, but it was not widely used, and it was, very marginal. And there was this decentralized alternative that MakerDAO did, which is now Sky Money, I think, and that's it. But now this is like major players um, um taking up traditional finance as well. They're buying football clubs and whatnot. So um, I think we might see 2026 as a transitional year in terms of I don't know where crypto as a market is going to go. It obviously has impact. So if there's a continuation of a bullish trend throughout next year, then I think it might be, 25 might be the year before the big year. If there's a continuation of a downtrend, the interesting part is going to be, where is the on-chain yield going to go? Where is the money going to flow? What kind of
Don't you feel
assets
here,
is going to
Dennis, that
seek?
there will be don't you feel that it's about time where the state of the crypto market separates from the state of the tokenized assets market? Because to me, those have no relationship whatsoever, whatsoever to each other. So I'm not a crypto guy, I'm the asset guy. So when I look at assets, and when I look at the token that represents an asset, that holds an asset, I see it as something that does not represent anything that crypto does represent. Don't you feel that in eventually those will depart and will not anymore be connected, including cycles of those? Although there's a correlation probably between Bitcoin and the rest, and other asset classes today. And this correlation is announced. I believe it's a technical correlation myself. I don't believe it's a fundamental correlation whatsoever. But don't you feel that eventually that will happen?
Yeah, I think eventually down the line there's going to be a convergence that it won't matter. That it's not going to be cyclical anymore. But I think the cyclical part is in finance, the contracting and expanding of liquidity in general, of inflation, with inflation and all of it. There needs to be liquidity that comes into the market so that the market can actually exist. That's, you know, how the market is currently composed, of how it functions.
And
In the
that's
crypto
our
market,
DeFi, and that's our DeFi Connect.
in in crypto, the expansion is a lot of times driven by Bitcoin's expansion and contraction, because the market just doesn't know how to price it. We as people, we don't know how to price it, so we're attempting to price it in a certain way, and we're always mispricing it either on one side or the other. But I think when it comes to yields in DeFi, if you look at the past couple of years, you could earn above average yields with depositing stablecoins into lending protocols. So why the heck would anybody else do anything except that? It's a very liquid asset class. It yielded 7 to 15% at times, maybe sometimes even 25, absurd amounts. All these yields were obviously juiced up with additional tokens that were, created out of thin air, right? And those yields were interesting. So all the liquidity was in DeFi was kind of, aggregated into this kind of markets, and they were thriving. However, now these yields are not there anymore. They're just dropping. And if they continue to drop, now what asset becomes interesting? It's your asset, Makram. It's the real estate asset that becomes interesting, because that is totally unrelated to Bitcoin. It's unrelated to the juiced up lending protocol yields. It's unrelated to US Treasuries, in a way. Um, and and it has this utility, this material within the built environment. All of that is there, and people still need to live and work and show up in spaces, right? So
This is a very core important subject which we discussed several times, and we discussed in very long meetings and discussions. Why would anyone buy tokenized real estate? And my view at all times was, if you have the right real estate on chain, people will buy it. The problem is that most people are, if I could say most is an understatement, are tokenizing rubbish. And when you tokenize rubbish, nobody would buy it. But the question or the argument at that time was, my man, your 7% of a great quality asset is competing with a 15% of a super liquid asset. So in other words, every liquidity on chain will be driven by that. I said no. They said most probably it is. And then the bigger challenge would be, the you need to get liquidity off chain to come, because liquidity on chain is used to higher returns and higher rewards in a very liquid asset, say. But you need to get liquidity that's not used to those returns, that's satisfied with the 6-7% to come and purchase tokenized real estate. And eventually, as Dennis said, the cleanup with coming. So you can also say that the coming year should be one of the cleanup years, where many of the practices, approaches, and I'm very happy to see that many of the players in the market are becoming more regulated. Regulation is approaching them. Regulation is becoming more friendly, and thus the players are becoming more friendly with regulation. Look, we can talk so long about that, because to me that's one of the most interesting subjects, and it's at the core of what will happen. And technically, the evolution, legally, the evolution, structurally, the evolution that have taken place over in 2025 is huge and is to build for all of that. However, we will not take longer on that, because we need to talk about the roadmap and what have happened within Blocksquare, Ocean Point, and the marketplace, the admin upgrades, all of the upgrades that have happened. We need to talk about the standardized corporate resolution and what have evolved of that. We need to talk about the growth. We're at 200 million, and what does it mean? And I said before, we talked about this before, what's the difference between the first 100 million and the second 100 million? It's a huge difference. And it's not only about the number, it's about the subject in the number. So we have several subjects to talk about. So let's jump into that. Let's talk about the roadmap, Dennis. Otherwise, we will skip the 30 and 40 minutes that we promised people will not skip. Roadmap 2025, 2025. What have we achieved? Where are we going afterwards?
So yeah, so there's just a small remark on the previous one, right? Because it's interesting. It's think about, whoever is listening to us, think about the yields that were there in DeFi for the past years are never going to be available again, ever. It's never going to happen. The same thing is not going to happen. And now the question becomes, what's the appetite for the on-chain value? Where is the appetite, right? There's going to need to create a bit of understanding of liquidity versus risk, liquidity versus return, risk versus return. And this is something you didn't have to do before. Before, it was an easy game. You have stable coins, you put them in a protocol, and you get great yields. Amazing. That's easy. Everybody can play this game. Now it's gonna people gonna need to, companies, institutions that have funds on chain are gonna need to step up in their discovery process. And we're already getting signals that real estate is a very sought after asset class. So on the other end, the real estate market, if you look at it, you look at Germany, you look at the UK, you look at all the markets, it's there's not many transactions happening. There's not much liquidity there. There's not much moving happening. So there's a need in those markets already for products like tokenization, or at least openness to test them out. The only problem is the question on who's going to buy. And when you have this match made in heaven in a way, where you have asset owners who wanting to leverage from or the divest a bit from the realized or not yet realized returns of their investment in the past few decades. And on the other end, you have a market that is, very, very hungry for yield, even at the expense of liquidity. Then real estate tokenization starts to make sense. And
I said a statement a few days ago in a conference. I'll say it again. I'll not explain it. I'll say it only. If this cross cycle did not have coming serious devaluation of currencies, and it's part of the mega cycle, it would be, or the coming decade would be a lost decade for real estate. Yet, your profit currently does not need to be in the asset increasing in value because of fundamentals. Maybe. It may be in the asset persisting and keeping its value, and its buying power and its cash flow capabilities, while currencies are dropping in value. So if you're comparing two, one is deteriorating and one is staying, this is automatically making a profit. And
exactly.
again, it's not. I'm not bidding on
But
that.
it's
This
but
will
it's a good
happen.
addition. It's a great addition to what we discussed, right? And I think it makes a lot of sense. And even if fiat is tokenized, it just holds the same qualities, or you know, or
Exactly.
non-qualities of it.
Exactly.
Going to our roadmap. So
So roadmap.
what have we done in 2025 for our audience? We've done, I think, quite a lot of things. We could have done, or we put on our plates a bit more than we have done and achieved. But that doesn't mean that if it's not visible on the outside, work hasn't been done on the inside. There's several reasons why we haven't maybe finalized certain things. For instance, our website. Many say, "Hey, our website, when you'll be updating it and so forth." The thing is that our website is driving leads, and and it's working as it is right now. It's working well. It's driving leads. People get to us, and the right people, the right companies get to us. So a lot of times is, do you change or do you just keep on going with the same? And we made the decision to keep on going with the same, although we have developed a whole new website. Obviously, we're going to make that switch sometime, and it's probably going to be in 26 because it's not didn't happen in 25. But we've done work there, and it's not visible to anyone. So that's number one. Then we have done the release of the fully redone, remade the app of Ocean Point, which now has, everything I think everyone in our community hoped for. It has a great UI. It has different sections. It can grow with the growth of different pools that we might have in the future. It now also connects directly to so Ocean Point staking of real estate assets directly connects with our marketplace, and the marketplace is also on the second version, which was rebuilt from the ground up, totally new UI, and I think it has created a much better user experience for everyone buying, selling tokenized real estate. Um, what else? There's this project, this white paper we released this year. And I think it's a very well written white paper by several people who contributed to it. There's also this podcast that we created with AI, as a easier way to digest it. Um, the smart contract that um, is the main part of it has been now audited successfully. We've been postponing the audit because when you submit to an audit, you want to stick to that code. And we had certain iterations that we wanted to include and do because there was obviously reflections. It's never the end, right? You can of course upgrade a smart contract in the future because all of it is upgradable, but you don't want to change the logic without a subsequent audit. And audits, for everyone who is in Web3 development, know that they're quite costly. So you want to nail it in the first time and not re-audit it later on, because otherwise it's bad management. But now we have this version that is going to go out, and this is, we're going to talk about it in in the episode after New Year's. Um, the roadmap for 2026. What else? There's um, there's updates we've done to the system admin, the way our team interacts with our system, that nobody else sees, but it's an internal tool that we use. Um, we've done a rebuild of the admin panel for our partners that they use to manage their marketplaces. It's still not released fully, and so our partners are still using the old one. But it's something that we have said we're gonna kind of release in the beginning of next year, so first month of next year. There's been certain changes in our team. Some new people came, some old people went away. So overall,
How does this entire there's many others guys by the way that's happened. So Dennis is talking about the high mark items, but there's many other items that have taken place and many other evolution articles and particles. However, how does this represent the whole industry and make the focus or that the focus in 2025?
I think it's hard to take from this, and then say how does that reflect on the industry. But
In
if
other words, have the
if
industry
action
evolved the same way?
if there's an action reaction, right? Then if the development of new products, improvement of new products, and overall work, from marketing to sales, if that is improving and growing, then it means that there's an action on the other side that requires those changes to happen. There's a need for it. Otherwise, you're not putting work and effort into something without understanding that there's a need growing somewhere. And here's where it comes back to our kind of leads engine that we have. We see that there's more and more interest in what we're doing. There's companies that are much, much bigger than ours currently that come to us and say, hey, can you build us this type of website or application where we can, you know, tokenize real estate and put it there and people can buy it. And so they come with a specification. And we're like, well, we can launch it in 2 weeks. Or, and they're like, well, but you need to build it. And we're like, well, we have exactly what you want. We have it there already done. And they are amazed because they didn't expect that. They didn't expect that there's a company out there that serves exactly what they want on a silver platter. And I think that's a signal from the back, saying, hey, our times are to come. If there's this real estate company looking for this, there's 100 more out there that are going to need the same thing. And they're going to be contemplating, do we build it ourselves or do we just use what they have? And we can grow with this partner because they understand it inside out, what they need, and it makes things much easier, for us. And they can really focus on the real estate side of business, on the financing startup, on to creating the community around their product line.
200 million milestone. What's very important in it? 100 million first, or very big part of the first 100 million, was people who were testing, experimenting, incentivized by staking and other stuff, coming on board, joining us, tokenizing the real estate. Yet the 100 million that follows is very different in my view, because one, it's very different because those people are coming in to tokenize to sell. Two, the incentives were not as available as they used to be. So anyone who's tokenizing today is beyond experimenting. Is not only experimenting to see what does it represent. Three, it comes at a time where yes, it's not scale when it comes to real estate, because 200 million is not scale in real estate, but it's proof of viability and validity of the process, the approach, the operation, and we go from here. Where do you see us going from here, Dennis, and why and how?
So there's two things that we made the decision doing, right? One thing is we've made the decision that with this coming year, Ocean Point's marketplace needs to become a marketplace. Currently, it's a live production, a live environment way of showcasing what we can do and what we offer. We never wanted to grow it into a marketplace because we felt that our focus should be on developing the infrastructure. Now that we have this infrastructure quite maturely developed, we can allocate some resources into driving one side of the business into a different direction. And I think it's going to be beneficial for us to do it, because not only will we be able to, build and grow Ocean Point as a marketplace, but we will be learning internally what works and what doesn't, and be able to share this across our ecosystem of marketplace operators. So one way of growing our, you know, not TVL, but total assets under tokenization, if that's a term. And then the other one is, of course, acquiring more mature clients. So if we now have focused a lot on the launchpad, on companies that are dipping their toes in real estate tokenization, and this is something that we'll continue doing. We'll be focusing a lot on acquiring more mature clients, companies between 50 and 100 employees that have a certain amount of assets under management, or and are able really to come with their marketplace with a solid institutional grade offering, and distribute it across the channel of clients that they already work with in a more traditional way. And then offer
This is
this
very important, by
tokenization.
the way.
Yeah,
Yeah. It's super
yeah,
important because it's no longer the startup, the two excited young people who want it. Not really. It's the party that has assets either owned or under management, and sees that as a real opportunity and is solving with it a real. Legislation is not as difficult for them. They're much more serious about their business, and at the same time, they get scale much faster. So 100%. And the idea about making Ocean Point a marketplace is, in my view, one of the most important elements which we fought so long for, because the ability of yours to go out there and prove it can happen. In my opinion, again, if we tokenize good real estate, everyone is looking for good assets. I'm in the real estate business. We always say the owner of the stock is the owner of the market. If you have good stock, everyone wants it. It's not the other way around. Yeah, go ahead, Dennis.
No, yeah, I think you've summarized it very well. And I think, going
Then
into this different shifting to this marketplace approach as well, it's going to do some internal reorganization on our end as well, because we're not just this software infrastructure developer that does things on our own pace, but we're really running things differently as well. We'll need to acquire property owners. We'll need to implement due diligence processes, all of that. But we have a legal framework that works great for Europe, so we'll be able to focus on European real estate assets first. And on the other end, we'll be implementing mechanisms for us to really work on the B2C side, kind of more, which means, creating internal incentive systems that that incentivize people to invite other people to become users on the Ocean Point marketplace. And we can talk about it after New Year's, how that's going to work. Some people in our community already know about it, especially our ambassadors. I think we're now at 100 ambassadors all over the world that are working with us.
so look, there's much that happened. Already 48 minutes. We'll take 2 minutes only to talk about positioning for 2026, and then we'll say goodbye to the year. And look, it's been an amazing journey every day of the past years. Hopefully, it's much more amazing going forward, because when you start going mainstream, and as Dennis said, it's good to be right. Yeah. Uh, it feels good to be right. So eventually, it hopefully will feel good. And wherever you're wrong, you're corrected. And it doesn't feel great to be wrong, but does feel great to correct it and then end up right. So, how are we positioning for 2026? What are we going for, Dennis? And trust me, guys, by the way, there's many subjects that we hinted on now that will have full block chat sessions after the new year. In a roundup session, trying to squeeze it to 40 minutes or so is not easy, but we'll try our best. So how are positioning for 2026?
Look, 2026, we're going to see how the market goes. We have clear goals, what we want to achieve. We're going to talk about those goals in the first block chat of the year. So, everyone following us, stay tuned and, tune in into that session. Um, as we've hinted, DeFi is going to be a big topic for us, and this is where we are betting our horses, or betting our money on the DeFi horses, let's say. And I think this is the main differentiator when it comes to real estate tokenization. We are doing a lot of things for DeFi, and I think that's where something will happen, something very interesting, probably.
It's been a good year. Uh, Summing it up in this session was cool, but I don't believe a session sums it up. I believe much more have happened, and there's much to be talked about. What I would tell you at the end of it is, look, if you haven't bought real estate that is tokenized yet, go ahead and try researching a piece of property that's tokenized, understand it, and if it suits you, purchase part of it. Um, we're going towards a year where, as Dennis said, there's frameworks set to have assets go on Ocean Point that make sense. We're insisting on assets that make sense, because in our view, good assets have crowd waiting. The issue is that you don't have good assets most of the time, because anyone who's coming into, oh, tokenization, a new technology, let's rip everyone apart and let's try to make the most amount of money possible, create offerings with 2% real value and real return, and eventually some of it sells, and that's why we start offering more of that. Not we've never offered that, and we hopefully will never offer that. Dennis, any last words for 2025 to everyone in our community and our team?
Well, I hope everyone enjoys their holiday season or the holidays that are coming up. Those who celebrate Christmas and New Year's at this time. Um, Thank you for watching us. And if anyone's gonna go back and watch the episode where I first mentioned about Ethereum, the gas costs are gonna go, lower. Um, Send me a DM. Remind me which one was it. I don't remember. There was
Actually,
so many episodes we've done.
so many of
125
them,
right
yeah.
now. Amazing.
And I've just noticed it recently because there was a sudden drop in the costs. And I was chatting with Dennis. We had something else that we're doing that we haven't yet talked about in public. We have something else that and he said, "No, man, it's very cheap." And I said, "Habibi, it's not." And Dennis said, "It is." And I went back and researched it and talked to our guys and found that it is cheap. And I said, "Okay." So, so all of a sudden, it dropped the cost of a transaction dropped from making a transaction usually of $100 barely feasible or penalized by the cost of a transaction to being non-significant. And you can do $100 transaction now and super efficient, and it's not significant at all. The cost is not significant.
We're talking about
Thank you
cents
for everyone
today.
who.
Cents.
Sorry.
We're
Cents,
talking about
exactly.
cents
It's I.
today. It was dollars and now it's cents. Yeah.
It's less. Sometimes it's less than $0.01. In other words, it's less than 10 cents. Okay, which
Exactly.
is amazing. Thank you for everyone who've been with us for all of the period that have passed. Years have passed. Some of the years were very tough. Some of the years were very good. Some of the years started great, because everyone is who talks tokenization is in a way or another thinking also crypto starts great, and probably his money is also, his liquidity is also tied up in crypto and ends up tough, but it does not matter. Through years that were good or tough, we're an infrastructure provider. We're delivering to what we said we would deliver, and we continue to do so. We're not run through cycles. We're affected and impacted by cycles, similar to everyone else. No one is immune. But we've put that effort to be non-hype consistently on it. And there's many of you who've been as believing and as hardworking and much more. We thank every single person who believed so much, even people who believed in ideas that we thought would never happen and grow. And then it happened and grew. So that's amazing. That type of conviction is what's required. The team has been amazing. Ambassadors have been growing and amazing. The market, I mean the everyone who's engaging with our economy has been great. Much is coming. Try tokenized real estate. Try real estate. People say away from fiat now towards whatever. I would say away from fiat towards cash flowing assets. Maybe a very good idea, the right ones. And a very important part of it is cash flowing assets. So cash flowing assets, tokenized real estate gets you fractions of those, as big as you want, as small as you need to have, the right diversification and the right reach and the right approach. Thank you all for being here. Thank you, Dennis. The
Thank you,
journey has
Makram.
been amazing, and the block chat have evolved big time since we started. If you want to take a laugh, go laugh at the first, second session that we've ever had, and join us in 2026. The first one, we will be talking about the future of what will happen 2026, what our roadmap is, and where is it coming. And watch through 2026, but don't even stop at watching. Engage 2026. Much is coming. Thank you, everyone,
Definitely.
for being part of our energy.
Ciao.
Until the next time, ciao.